If you're in the market to buy a franchise, how much money do you actually need? I mean, most of you probably already know that franchisors have what's called a net worth requirement. How does that net worth requirement even work? What's included in this net worth requirement? Is there any flexibility in these net worth requirements? Like, do you have to have exactly that amount of money? That's exactly what we're gonna cover in this video, so make sure you stick around. I think so many people are getting held back from the fact that they may not have all the money, and the reality is it's never the money that stops you, because if you're truly committed to owning your own business, you'll figure out a way to get the money. So the reason why franchisors have net worth requirements, it ultimately comes down to this most simplistic reason. If you're new here, welcome. My name is Tariq Johnson. I built a multi-million-dollar franchise business with locations in California and Florida. And I just want to first say thank you. One, thank you to all of the subscribers. We're now over 2,000 subscribers here, and it's rapidly growing. And also thank you to the over 600 people that have downloaded the 7-step blueprint to business profits in 60 days. It's absolutely free. It's a 28-page PDF to show you step-by-step how you can create a profitable business in any industry at any time, whether a franchise or your own business. And if you want to grab it for free, you can head to tariqjohnson.com and get it. I'll leave a link in the description below. But this is the exact blueprint that my wife and I used in order to create our first profitable franchise in less than 60 days after investing over $300,000. It's free, so make sure you get it before I start charging for it, because at some time I'm going to switch it up and offer something else for free, and people are actually going to have to pay to get the 7-step blueprint. All right, so let's jump into the video below about how much money you need to start a franchise and how the franchise net worth requirement works. Before you do, make sure to hit the subscribe button below so you don't miss out on any of the videos that I post. If you like entrepreneurship, if you're thinking about buying a franchise, and if you want to grow your wealth, then this is the channel for you. But the first thing that you need to understand from a high level is, what is a net worth? So a net worth is simply all of your assets minus your liabilities. Now, assets are something of value that can be converted to cash. So just an example of some assets would be your savings account. Your car can be an asset, although it's a depreciating asset. Your home's an asset. If you have artwork that is maybe worth a couple $1,000s, that can be an asset. So a lot of different things can be assets. Liabilities are generally debts, things that you owe money on. So a mortgage payment, your credit card, student loans, those are all liabilities. So in thinking about net worth, as an example, if a franchisor says that they have a net worth requirement of $100,000, then they require $25,000 in liquid assets. So what does liquid assets mean? So liquid assets are assets that can be converted to cash in a short period of time, usually 3 days or less, while maintaining its value. So a liquid asset would be cash. It's already liquid technically because it's cash. You got savings accounts, checking accounts, CDs, any sort of stocks, bonds, investments that you can sell quickly that roughly maintain about the same value. Those are all liquid assets. So your retirement account, your 401k, your IRA, different things like that, assuming that they're invested in liquid assets. And then so an example of non-liquid assets would be your house, right? So you're not going to be able to sell your house within 3 days while maintaining market value very quickly. Your car is not considered a liquid asset. If you have any jewelry or art or anything like that, those are not liquid assets, but are things that you could put as an asset to calculate your overall net worth. So as an easy example, if you're reaching out to a franchisor and you're trying to figure out what is your net worth and how much liquid assets that you have, quick example would be if you own a $300,000 house. Your house is worth $300,000. You have a $200,000 mortgage on your house. That means you would have a $100,000 net worth. And then if you also had $25,000 in your savings account and your investment and retirement accounts, you then add that asset to it. You have $125,000 net worth. And so then you have $25,000 in liquid assets. So the question for you becomes, the franchises that you're looking at, what are their net worth requirements? And if they require a $300,000 net worth and a $50,000 net worth, and you're close and not quite there, can you still open that franchise? I'm going to talk about that in just a second. So before we talk about, the amount of money you have, will that be enough in order for you to open a franchise? And how strict are franchisors on that requirement? Like, is there flexibility? What we need to talk about is why franchisors actually have net worth requirements. So the reason why franchisors have net worth requirements, it ultimately comes down to this most simplistic reason. They want to open stores, they don't want to close them. They want to open locations and units, and they do not want to close locations or units. And the idea comes down to this, although we can talk about it all day long about how franchisors want people that are financially stable and that know how to manage their money and that have a proven track record of building wealth, or if they have that sort of net worth, they've probably been in a professional type career where they have some sort of experience that they can apply towards their business. Those are all factors, but it ultimately comes down to the franchisor. If they select you and approve you as a franchisee and you open up a location or unit, however it works based upon that business, they want you to stay in business. And if you have only $10,000 to your name, and they usually require that a franchise owner has $50,000 to their name, and then things get tough in the business and it takes a couple months for it to be profitable, you with only $10,000 to your name, once you spend that money, you have no resources in order to be able to keep the business afloat, so the likelihood of you closing the business increases. And so outside of them not wanting locations to close, they also don't want to get sued. And if you have less money and you are in a higher position and likelihood to close the business, then what happens is that you have a higher likelihood of suing the franchisor as well. So those are the main two reasons why franchisors have the net worth requirement, is they don't want to get sued, and they don't want you to close locations. They want you to be successful. The thing is this, you have a vested interest with the franchisor. I mean, keep that in mind. They make money, generally speaking, off of royalties. Royalties are them charging you a percentage of your sales. So if your business is making 100 grand and they charge you a 10% royalty, they're making 10 grand off of you. If your business grows and you're making 300 grand, then they're making 30 grand off of you. And by them having 100, 200, 300, 400 franchisees, they make money off of the aggregate of all of those royalties coming together. And so they want to see you succeed. And it looks bad if they have individuals that open locations and then close those locations. That's one of the common questions that come up when people review the FDD is, how many locations did you close last year? How many locations did you close in 2019, 2018? Why did those locations close? People want to know the answers to that, because if you're investing your life savings into something, you want to know why locations are closing. So is there flexibility in the net worth requirement? I recently had a call with an individual that reached out to me from YouTube, and her question was, hey, we got $100,000, and a lot of the franchises that we're looking at require $150,000 in liquid assets. Will they still accept us? The answer is it depends. And I will say yes, there are a lot of franchisors that will actually approve you even with $100,000, but you have to convince them, and it depends on the overall situation that you have. Because I had another couple that I recently spoke to. They're from Canada, and although they have very little amount of money liquid, I think they only have $20,000 liquid, they own a house that's worth $1.2 million that they only owe $300,000 on, and then they own another house that's worth $300,000 that is completely paid off. So they have over $1 million in net worth, but they only have $20,000 liquid. So in that situation, It's just about having a dialogue with the franchisor. If you're letting yourself get caught up because you think, the franchisor requires $75,000 and I only have $55,000, I don't think they're going to approve me and I'm not going to reach out. You're making a mistake. Here's the thing with succeeding in business. You got to go for it. Ask questions, take risks, take action. Reach out to the franchisor and find out if they will approve you. Go through the process. A lot of the times for the franchisor, it depends on your personality. Look, if you're really sharp and you're responsible, you have a proven track record of succeeding in your professional career, the franchisor is looking at your overall entire situation. That's why there is Discovery Day and the entire process of them getting to know you, you getting to know them getting to know your entire financial situation, your resume, your background. Those are all of the things that they factor. They use the net worth requirements as a base to attract a certain level and certain quality and talent of the individual. So as an example, when my wife and I opened our first franchise location, there was a $100,000 liquid asset requirement, $300,000 net worth requirement. Now, we were fortunately in the situation where that was not an issue for us and being anywhere close to those guidelines, but it was our overall situation that the franchisor was considering. Now, as an example, there are some franchisors that have really, really big requirements and that you won't even be close, and the likelihood is that it's not even worth going for them. As an example, though, there are some caveats. So I personally love Five Guys Burgers and Fries. Five Guys Burgers and Fries, if you know it, that is a franchise. Now, if you go on Five Guys' website and you look at their franchising opportunities, they say that you need to have $5 million to be considered for a franchise with Five Guys. But here's the catch. They don't say that you need to have a $5 million net worth. They say that you need to have access to $5 million worth of capital. And so the mindset that you'll have to start shifting and really, if you really want to succeed in franchise, is thinking, how can you access capital? Now, I made a video about how to start a franchise with no money down. The link will be below if you want to check that video out if you're in a position where you don't have a lot of money to buy a franchise. But one of the key things you can do is raise capital from investors. If you were to go out and pitch investors and be able to set up like a holding company that people invested into and you promise them a rate of return, then you could do that, have access to that capital and be able to open up a franchise. So Five Guys is not saying you got to have $5 million to your name. What they're saying is you have to have access to $5 million in capital. Believe it or not, there are companies and groups, private equity companies. If you don't know what that term is, look up private equity. But basically what they do, they go out and find investors. This is what they do. They raise capital, let's say 5, 10, 15, $20 million, and then they go out and they then seek out franchises, businesses, opportunities in order to invest that capital, and then they give a return to the people that invested their money. I had a call with a guy recently where he runs a private equity company, and they were the largest franchisee for 2 different companies. I don't want to say the company because it might give away the guy that I was talking to, but they own like a whole massive, like half of Colorado for a specific franchise, and they go in and they hire a CEO to run the franchise. They raise the money. So you got to be resourceful when it comes to thinking about owning a franchise and coming up with the money. You might have a family member that has money, and maybe that family member wants to partner with you, and you set up an agreement with them. So this is when I say is that it's never about the resources, it's about the resourcefulness. And so if you're committed, if you're committed to opening up a franchise and you're committed to improving your life and creating financial freedom and wealth for yourself, you make the decision and you figure out the way. So even if you don't have the money, you can find the money. And so for the individuals that go, hey, but Tariq, like, I don't know any rich people. Not everyone's family has money. These are some of the comments that people put on my video of how to start a franchise with no money. Here's my comment to you very directly. If that's your comment and excuse, then you don't deserve to own a franchise. You should not be a business owner, plain and simple. If you can't be resourceful, if you're broke and you don't have any money, or you only got a couple $1,000s to your name, that's on you. And you may not like the comment, but that's the reality of the situation. You got to go figure out a way how to earn money and how to grow and save money. If you don't have a track record of doing that, then you have no place in owning a franchise. Or I understand that sometimes hard situations happen and things are difficult, and sometimes people are in recovery mode. That's okay. But if your excuse is, I don't know anyone with money, or my family doesn't have money, then you shouldn't be in business. Some of the most successful companies, Tesla and Dell and Apple, these guys, Facebook, these guys had to raise money. They had to go out and find investors. They had to sell people and pitch people on their idea on investing in their company in order to be successful. Majority of the companies and tech companies that get started out there, people don't have the money for it. They're not actually paying the money and putting up the money. They're finding the money to do it. So I'm sorry that I went on a little bit of a rant there, but it's a little bit of a sensitive and hot topic for me, because I think so many people are getting held back from the fact that they may not have all the money. And the reality is, it's never the money that stops you, because if you're truly committed to owning your own business, you'll figure out a way to get the money. So drop me a comment and let me know what you thought about this video and what questions you have about the money part of owning a franchise and the net worth requirements. If you want to know a little bit about my story and how my wife and I bought our first location and then wind up buying our second location, and exactly where we got the money from and how we did it, I tell that exact story in detail in my video called How I Built a $2.4 Million Franchise Business. I will leave a link to those descriptions below. But if you've made it this far in the video, make sure to hit the like button for the YouTube algorithm. Make sure to drop me a comment below and let me know what your franchise questions are. I hope you are subscribed to the channel, and I look forward to seeing you on the next video.